Good morning, traders from Chicago. It's 8 a.m. Chicago time on Wednesday, FOMC day, May 3rd, 2023. This is episode number 2461. Thanks for joining me here. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, after a really nice sell-off yesterday, I'd gone into great lengths talking about yesterday's rounded top, the neutral extreme down day on Monday, and the very strong potential for a pullback to at least some of the key levels, 13.080. NQ 4154, 53, 55 ES, and so on, that the bias was really short yesterday. We ended up getting a pretty decent flow through to the downside. This morning, again, we're opening in a mixed market. Europe seeing a bit of a pop higher, but the U.S., it's kind of a it's mixed to mild risk on sentiment this morning overall. The Fed rate decision comes in today at 2 p.m. Very important. But with the Fed, and I'll show you this, we know what we know with the Fed, right? So we have the Fed fund futures pricing in 85.1%, 25 basis point hike today. That's what's expected. That's what's likely to be delivered. The Fed's hiking is not as important as the comments that they could make relating to how hawkish they plan to be going forward, what their sentiment is about the current numbers. The JOLTS number yesterday, the job openings number yesterday, was a real had an important impact. Overall, the JOLTS number came in at 9.59, was expected at 9.775. And what that number tells us, and this number has been falling pretty hard, if you recall, the JOLTS number used to be at 11.755 million job openings, unfilled jobs last year. And look at how it's declined this year. It's fallen pretty dramatically from 11.234 million in December down to 9.59. This is important. Why is this important? This is important because you have to balance what the Fed is doing with what with the potential of a hard landing or a recession. And yesterday there was a lot going on that made large participants anticipate that the hard landing may still be in play here. So there was a lot of selling yesterday. This morning, however, where'd my calendar go? Awesome, it's off screen. Okay, let me pull this over. This morning, we did have the ADP number. The ADP number came in at 296,000 versus 148 expected. The prior is 142. Just a reminder, what does this number mean? ADP is the largest payroll processing company in the U.S. This is what large firms use in order to process their payroll. So they get on-the-ground data regarding employment because they process payroll. And it's supposed to be some sort of a precursor for the non-farm payrolls report this Friday, the unemployment report this Friday. So it came in pretty hot. But the hottest part that's holding things together is employment. We saw that kind of fall off in the JOLTS. We still haven't seen it fall off in non-farm payrolls. So this Friday's non-farm payrolls is going to be very important. And by the way, the JOLTS number was from March. So we still don't know what April did, and so that's the overall picture. It's really a market that's really nervous about a hard landing. So PacWest and Western Alliance shares tumbled Tuesday as U.S. regional bank fears persist. ADP higher than expected. Oil dropped below $70, and I talked about this yesterday. I said that I've been pushing for the fact that since it didn't hold 77, it retested 77 from below in crude, and then it fell through the 75.60. It's very likely to go to 72 with a target of 70, and it hit that today. Look at crude right here, down 3.08%, trading at 69.44. I talked yesterday about crude longs being in a world of pain, and that was definitely correct. Not that I strive to be correct, but this is what we've got. Europe released its unemployment rate, came in at 6.5%, hotter than the 6.6% expected. And then for today, we do have the service S&P Global Composite PMI, the S&P Global Services PMI, and then those are 945, and then ISM Services PMI at 10. Services prices also expected at 10. Forecast is 59, and then we get the crude oil inventories at 10:30, and then we are likely to go absolutely dead, looking for the Fed rate decision. The Fed rate decision is expected to hike the 5% current target to 5.25, and then the press conference is at 2:30. The fireworks today are likely to be relating to the Fed's guidance during the press conference at 2:30. The question is, do they provide guidance that is still kind of anticipating the numbers that are coming in, or are they starting to see signs, true signs that things are slowing down, and they may taper more rapidly, or this may be the last hike, say, for the year. And then this evening we get the Caixin manufacturing PMI expected at 50.3 out of China. Looking at the S&P, the S&P has a multi-distribution profile this morning. I would kind of really classify it as balanced. I know it's set as multi-distribution because it's kind of skewed. It's got a bit of a fat tail. But it's really balanced. The market moved away from the overnight open and has basically sat sideways. I mean, in my 1 tick by 20 PNF chart for the overnight session, I had like 6 bars for the entire session until ADP came out, where we started to print more bars. Really, really poor auction last night with pretty poor volume. 151,000 contracts traded, 87% of the inventory is long that has traded this morning. So 87% of the 151 is above prior close, and the range is about 18 points, which is pretty poor as well. We did try to touch the mid-century figure from below at 41.50, the high of 49.5. So that's how things are shaking. Did you follow all that? Yesterday, we did leave a gap behind. Very important clues yesterday. It was tough to get a hold on this thing. Managed to see a setup right here in the 41.65 area. A retest of VWAP early that failed, and then the target for that was 41.53 or 50. If you're 41.55, the MC point of control, and then the extended target for that for me was the 41.20 right down here. 41.20 is the bottom of this very, very poorly auctioned profile from last Thursday, and then beyond there, I was looking for 41.10 right here. 41.10. We've seen a reaction of 41.10, and it pushed through and got to 41.05.50, something like that. Pretty sweet to see this kind of a setup kind of take place. Lots and lots and lots of FOMO pressure yesterday based on the trade. but we did a lot of some really important clues yesterday. The opening print was basically the high with initiative selling, with an open drive and initiative selling down. So immediately we could see that we did not want to be on the buy side. If I can eliminate a side early as a trader, if I have enough clues to eliminate one side early, this is hugely beneficial. This is the Monty Hall problem, as I've talked about many, many times. If I can sit here and eliminate one of the three doors, the opportunity in the other two is much, much higher because we've eliminated whichever choice I make. I have a 66% chance versus 33% to start, something like that. Read up on the Monty Hall problem. The idea is you're supposed to change your choice every time to increase your probabilities. But when it relates to trading, if I can, on days where it opens and it goes up and down and it goes up above the open and it creates an opening swing and it pushes the high, then it pushes the low, then it pushes the high again, it pushes the low. Those days are tougher, are less clear simply because we have to consider both sides. But if the market comes in and gives us a clue that one side is absolutely off the table, then my focus can then really narrow down and I can just focus on, okay, where do I need to get in short? For example, for yesterday, where can I get in short, for example, yesterday, and then and with predefined risks. So let's look at that here for a second. Wrong product. Where was it? So we had, there's the open. The open immediately sold off. We did not try the other side of the open. So the IB high was one tick above the open. And then we had these multiple tests of VWAP, right here. You see this test of VWAP that failed. And then the break of 65 right here. The break of 65 gets us running. It does not look back, no heat whatsoever. And those kinds of trades, those kinds of setups are just pretty rare. I don't see those very often these days. But from there, it was really just a matter of, and if you look at the rotations, it's tough to see here, but if you look at the rotations, the up rotations were limited to about 3.5 to 4.75 points. The down rotations were wider, so you could see the whites. It's hard to see that here because it's all compressed, but the white bars, much smaller and more individual than the red bars, which extend down, down, down. So if you look at the faded line here, this is the impulse limit. If you look at the impulse limit, it was not touched all the way down to 41, right down here, 41.20. If you recall, the single prints, the first single prints were at 41.20. Until we got down here, we did not really tag the impulse line or the impulse rotation limit up until we got from there all the way up from 41.65. And then from there, it still continued to take out the impulse limit to the short side on the rotations. Let me expand this up a little bit. Still continued to take it out, but then we start to see that the market is having healthier and healthier rotations to the upside once we hit the 41.10. And then it just finished in the sandwich right here yesterday. It finished right against the IB low, the VWAP, the full session VWAP, RTH VWAP, and RTH mid with full session mid higher, full session mid right up here, RTH VWAP, the blue line, full session VWAP, this dashed cyan line, and RTH VWAP, the solid line. And it just came right back with the IB, and it settled here. And then we left behind this nice little low volume node right up in this 46, 47 area that I wanted to check on this morning. and it just kind of drifted through there all the way up to 49.5. And then this morning, what we have is the overnight point of control, VWAP, and mid right on top of each other. We saw that yesterday. And so this morning creates this issue where we're opening around the mid of yesterday's session, entire session. We're opening around the mid. The overnight point of control, the most accepted price overnight, is right in that sandwich, and we're in the middle of the range. There's no imbalance, whereas yesterday we came in with an imbalance. We were below the prior day's range. That's important information. And so we come in today, and we are likely to have two-way trading today because there was a pretty decent rally from that 41.0550 all the way up to the 41.44, about 40 points up, and we managed to bring the auction back to the middle of the range. There's an incentive here for buyers. We could see buyers coming in from the 41.10 onwards. There's an incentive for buyers to shop for lower prices here, and there's an incentive for sellers to try to sell a pullback to look to see if we can test the low of the impulse at 41.0550. What does that mean for us? It means pop, 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 chop, 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 chop this morning. Couple that with the FOMC. The FOMC coming out at 2. And then some numbers coming in, the ISM services, the S&P global numbers, and a bunch of other stuff. It's likely to be quite choppy. This is a day where generally you want to keep your powder dry. You want to stay calm and kind of save your bullets for when some more volatility and direction comes in after the FOMC. So it's important. I'm actually supposed to be on sabbatical here this week, working on a product right now for the last 2 weeks. But today I'm going to be here for the FOMC to see if I can comment in Convergence Maven channel while it's playing. But what's really important, really, is the 2:30 conference. What Fed's Powell says is going to be very, very important. Watch your treasuries and look for follow-through, directional follow-through once those comments come in. So this morning, my hypothesis for the day, or the scenarios for the day, is chippity, choppity, choppity, chop. The NASDAQ, if you recall yesterday, I talked about 13,080. Let's go back to where that came from. So, the S&P this morning, very likely, this is a pretty good base that we had yesterday. Pretty good pullback. We got tangled in the mid and VWAP and so on from the RTH session. As you can see here, we closed right on top of the point of control. So we brought the point of control down to the middle of the range. That's where we settled, right at mid, right at the IB. I mean, the S&P did find some buyers and had one-time framing up, pretty solid one-time framing up into the close yesterday. There's a strong indication that the auction successfully found some buyers. I'm expecting the S&P to walk itself back up to the 41.53, 55 area again from below. That's our magnet. That's this level right here. This magnet is very likely to get some attention this morning, so I'm expecting it to kind of push back up there and retest. So the NASDAQ, the number that I was looking at is down here, 1380, 13,080. Couldn't quite get to it in the NQ yesterday. Got to about 13,100 and bounced, and then the NQ managed to close and settle right at the mid. Also has its point of control there and has its overnight trading occurring right in this zone here. The NASDAQ's expected to retest 13 to 13,260 or so from below. Okay, the NASDAQ is likely to continue to squeeze higher from here. Now, this is an impulse day in the NASDAQ, so this, you got to keep an eye on this low that it put in yesterday, just like we have to keep an eye on the low that the S&P put in yesterday. But the S&P having breached 50% on the impulse puts us on our heels. Doesn't make me aggressive about expecting 4105.50 to be tested. And we see the same in the NASDAQ. It's not usual that we have such a big move down on an impulse and then we manage to gain back 50%. This is why I'm expecting the drift to continue higher right up here in the NASDAQ, right in the zone right here at 13,250, 13,260. I'm going to put it right here. 50, 60 is where the NQ is expected to kind of drift up at some point today or tomorrow. A quick look at crude before we go for those crude fans. Look at this thing. Absolute destruction. We had the OPEC plus cut in supply of about 600,000 barrels. We held balance for about a week. We broke balance with a gap, held that for 3 days, fell back into balance, and then once we broke below balance, we went right to 77, our key figure, very important, 77. We tested 77 from below, so what we have is sell, pull back, continue, pull back, create a new impulse, and then so the expectation is pull back into that 74 and then continue lower with the target of 70. That's the entire plan for CL once it broke through the balance to the downside on April, whatever it was, 20th or 19th, right here. And it managed to get that done overnight. Pretty, I mean, look, I'm not advocating you should trade crude, but man, for a physically delivered fundamental product that represents itself, what a technical trade this has been. Really amazing. And then this morning we have a two-way auction on a gap down, and it's trying to be responsive, but this is a huge gap for crude, not expecting it to fill that gap. But it is FOMC day. Anything goes. I'm going to leave you, the last thing I'm going to leave you with is your relative delta. So we're looking at the relative delta. So compared to yesterday, the relative delta today, not much going on here, right? Let's zoom that in. And what we have here is the open is way down here from the prior session. And what the delta is already negative, even though we have quite a bit of distance to the open. This is an absolute drift. Some pretty interesting, very large lot action. We don't generally see that, but with the FOMC, it's to be expected. Very large lots, pretty busy in the overnight session. Very, very unusual for that much activity to take place. But again, this is an unusual day with the FOMC. But overall, the delta is flat, with price being positive right now versus the open. So there's not much we can read. It's not giving us as many clues as we'd like. The NQ is in a little bit better shape, and you can see the NQ has had very large lots, pretty busy in the overnight session as well, lots of hedging and so on. The NQ has been tapping on its VWAP all night, so keep an eye on the full session VWAP. That's an important marker. And then crude, excuse me, crude is responsive. Crude has fallen off from where it opened and where it settled yesterday, but the delta is quite positive, and so crude is very likely to continue to try to throttle up. Anybody's guess today as to what happens. I'll leave you with that. I know it's not too helpful, but pay attention to the fact that the FOMC is coming. We got these numbers at 9:45 and 10 o'clock, and then the FOMC. This is not a day where you'd want to commit to a trade and try to fight it back, okay? Good luck, and I'll catch you tomorrow. Cheers.